Hello and welcome to the Scaling Europe show. I'm Seb Johnson. Thank you so much for joining me. If you like what you see, please like, comment, subscribe. The more engagement, the more visibility, the better guests I can get and the better coverage I can provide of the European tech ecosystem. I would also like to say a huge thank you to my sponsors, Checkout.com, one of Europe's leading fintechs, and it is where the world checks out, and SurrealDB, the multimodal database for AI agent, which is partnered with thousands of the leading organizations, including the likes of NVIDIA and Samsung. So if you like both of those, check them out in the links below. Thank you very much. Hello and welcome back to the Scaling Europe show. I'm Seb Johnson. I am here with Aidan. Aidan is from AI Apply. Hello, how are you doing?
Very well, thank you. Big fan of the content. It's awesome to speak to you.
Thank you. It's interesting. I was speaking to Johan. I saw him at a talk once giving, he's like a master of content. He's actually inspired a lot of my content strategy, especially as I've moved from LinkedIn onto TikTok and Instagram. But I love what you guys are doing. I've been following you since that talk, which was probably 5 or 6 months ago. But why don't you just give a quick introduction to kind of who you are and what you've built?
Cool. Yeah, Johan is the go, which I must say is before we start. But I'm Aidan Kramer. I'm co-founder and CEO of a company called AI Apply. AI Apply is a consumer SaaS company. So we have AI tools for job seekers. So we help them go from needing a job to getting hired faster by democratizing access to career services that were once reserved for people that could afford a career coach. But what that breaks down into, we have a suite of tools going from something that will build and tailor a resume for you to make sure it's attractive to hiring managers, to something that will find and apply to the best matching jobs across the internet for you, so that you're the first person to apply the jobs that you might not have found, to something that will help you during and after job interviews to make sure you are polished and getting feedback and improving. So yeah, it's a suite of tools to give job seekers an edge in this very challenging market.
And you've seen a lot of success. Can you touch on some like traction stats, whether that's revenue or users or just what you've seen to date?
So yeah, we're a couple of years old. We stopped showing revenue after we started a bit of building public on X, and we were getting like 2 or 3 copycats show up a month, some literally copy pasting our landing page. So we pulled back from that, which is a real shame because I loved it. And I'm all for kind of openness and transparency, but not at the risk of damaging our reputation by people signing up to the wrong company. But yeah, we're 2 years old. We were growing insanely quickly. So we just hit 1 million users. We have seed strapped. So we raised like a very small round of funding from an SCIS fund in London called Hatch, which have been awesome, and a handful of very, very high value and supportive angels. And since then, kind of April last year, we've bootstrapped, so we're now scaling profitably, we grew like 5 or 6x this year in terms of ARR.
Wow.
And yeah, we're just, there's no sign of slowing down just yet. And that's off the back of an incredibly small team.
How small is the team?
So there's 7 people in total. And efficiency-wise, it's probably one of the most capital-efficient revenue per employee companies that are certainly in the space I've been leading at.
It's amazing. I think there's a lot to unpack there. I want to get into the efficiency piece first. I think that's so interesting. You've stayed so lean. You've grown to 1 million users. You're staying, I guess, like bootstrapped since the initial small round. Why is that? Do you think you could go further, go bigger with more money? Or do you think actually you just don't need it, so why take it?
So it's a combination too. So one, like at the very beginning when we started this company, it was about kind of optimizing for a high probability successful outcome for us as founders and for us as our team. So we didn't want to really go down the traditional VC route. We weren't trying to build like a unicorn company. And, I built a company before and I've gone through that kind of stage of pitching these unicorns. And a lot of people that were in my vintage of starting a company at a similar time, so about 10 years ago now, went through that VC roller coaster and then came out the other side with very little to show for it. So this time around, it's been about kind of optimizing for freedom, optimizing for a successful outcome, and just building something that is of value to a lot of people and it generates like real meaningful cash flow and is profitable. So we took the initial capital just to kind of give ourselves that first bit of runway, first bit of boost, helped us run some big experiments sooner. And then by not raising again, it's kind of really helped us focus on, how we build a sustainable business here. The truth is, there have been parts of that journey where it's been very, very tempting to take additional capital. It's not been a straight line up. We've had months and months of kind of flat growth. We've had a couple of down months, and it's kind of, it gets to your head. And you're thinking, if we had a few extra million in the bank, maybe we could hire this person that would solve that problem. But we've been very disciplined about not doing that. And now kind of we're seeing the reward of that. So, our team is very, very good at getting to a point where things are challenging, really going deep on what the problem is. And we've now built this kind of muscle of solving problems without kind of throwing resources at it. And the company is much, much better and healthier for it than it would have been otherwise. If we'd have raised, a few million towards the start of this year, we would have almost certainly grown a lot quicker at the beginning, but we wouldn't have kind of found the unlocks and the second level of product market fit that we've now found that is helping us kind of get this new level of growth that is profitable, that is efficient. We're building a better business for it. Which is something I didn't really anticipate or expect in the level that we've seen.
Yeah, I guess that capital restrictions gives you the mindset of just like we either solve it or we die, right? There's no like pot of cash to help you there. When you raised that initial kind of seed round, that early round, were you able to be transparent with investors and say, look, this is going to be the only round that we're going to raise. We're not aiming for $1 billion outcome. We think we're going to have a great outcome here, but it's not going to be a typical 50x, 100x.
Yeah. So it really helps having some aligned angels. So we raised a total of about 450K. And we had a good fund on board, and we were just transparent that like we don't know exactly where this is going to go. We think there's a very high probability that you're going to see a 10x outcome from this, and there's a smaller probability that you're going to see 100,000x outcome. We're not saying we won't build like a massive business if the opportunity presents itself, but we're optimizing for a high probability at this time. So the funds were great. They were slightly de-risked with SEIS, and the angels have just been awesome. And I think, having spoken to some of these angels, they kind of saw our attitude as a sign that this is the kind of business that could end up doing really well. And we didn't raise until we were also, generating, a few 100K in ARR. And we did that off absolutely zero resources. And we were already profitable, and we were already growing like 40% month over month with nothing. So I think they knew that, we could get a lot further with not taking on a lot more.
Yeah, that makes sense. It's probably refreshing for investors as well, right? To see an opportunity where you're growing without a lot of cash. And 90% of investing, that's a great thing. That the companies don't need the cash to grow that quickly. Where was the growth coming from in those early days?
So early days, there was a lot of short form organic content. So I was putting out a lot of content myself. So we were kind of testing product ideas, pushing stuff out on TikTok, Instagram, Reels. I would find a format that kind of worked to talk about what we were doing. Had some good viral success, tens of millions of organic views. Chart went up a little bit. That gave us some more resources to scale that out. So we would take that cash, we would hire a few influencers or pay them to repurpose those formats on their accounts, and that would expand the reach even further. And then that was our kind of primary distribution channel initially. That got us to our first 10, 20K MRR. And then we started kind of using some of that content for ads, started reinvesting in SEO. And then it was pretty soon after raising that we made our first like a growth hire. So when Johan came on board, we kind of showed him what we were doing. We were super early stage at that point. He's been kind of a rock star in that role. Again, like is not used to working with super limited resources we gave him, but has that mindset to just kind of keep endlessly digging to find gold. Has been an insane asset to the team, and has helped us go from like what it was basically nothing to now kind of hyperscaling.
Yeah, I think it's so interesting. I certainly find it in my own content that the volume of impressions that you need to generate to then translate to something more meaningful or tangible is just absolutely massive. You know, you have to be able to generate millions and millions and millions of impressions on a regular basis to try and convert those eyeballs into paying users. And so you mentioned that he was kind of your first growth hire. You've got 7 people at the moment. What does a team makeup look like?
So we just have Johan and Growth. We work with a few agencies for kind of content production, which kind of feeds into our ad libraries. We have Juana on support, who is just manning our AI-assisted support chatbot. She's incredible. And then we have 2 guys working on our auto-apply product, Roman and Martin. And we have kind of product engineer, a guy called Ole, who's working on kind of all of our core web and making sure we push stuff forward. And then we have Peter, my CTO. So it's like predominantly engineering and then kind of growth and support.
Yeah, so interesting. I mean, that's such a small team. And, you know, you mentioned you've got 1 person support, over 1 million users you've now hit. That seems crazy. You know, are you able to touch on like that person's support role, how they're leveraging AI? Because that seems like, yeah.
It is crazy. And that has been a role that's been really, really hard not to hire for, because the house has been on fire multiple times. And we've all jumped in. I jumped in. I've been kind of answering support chat. We built kind of a custom AI support chatbot. So plugged in kind of all our docs, plugged it into Crisp, and that kind of assisted her for a bit. And that was really good. We built kind of a very decent prompt library to answer most requests. We then kind of upgraded. We're now using Intercom that have Fin AI support, which is great. That takes away a lot of requests. But when we kind of have had like inflection points and new things have broken, we kind of go through a period of like new product iteration, new growth experiment iteration, and then like when we hit something, we kind of default back a little bit to support engineering and just thinking, you know, how can we automate some of these requests? An example, you know, we offer some refund policies if people kind of meet certain conditions, if they're like particularly upset or something's gone wrong, and we realized that was taking up 20% of Fauna's time. So we prioritize building something that would like automatically refund if certain conditions are met. And so just, you know, going back into our backlog and making sure that we can automate a lot of support, like before we actually just throw more bodies at the problem, I think is part of that like muscle that we built. And it's definitely compounded and enabled us to have, you know, such a lean team.
And when you look at what's coming down the road, what your next hires will be, do you have a view? Is it going to be more operational growth, product and engineering?
I think it's all going to be engineering, or product and engineering.
Interesting. So you think you're going to be fine, 1 person with AI on support, 1 person on growth, and it's just going to be building and shipping?
I hope so.
Yeah, it's amazing. It's such an interesting...
That would be the dream outcome, I think.
Yeah. I mean, it's so interesting. I mean, you know, you're sort of hearing all this stuff about the explosion of AI and how it's enabling people to build leaner and grow faster. And yet simultaneously, we're seeing more and more companies raise bigger and bigger rounds. And the two don't really seem to add up, right? You kind of expect, okay, well, companies should be able to stay lean and grow faster. And it feels like you're one of the few use cases where you really have nailed that of staying lean, growing insanely quickly while using AI to get you there.
I'd like to think so. Like I definitely believe in this kind of notion that like a 10x engineer becomes a 100x engineer if they can utilize these tools effectively. But I think it's the same with like across functions, right? Like a 10x support person becomes a 100,000x support person if they know how to like update the prompts, update our support, write tickets to support engineering, and like the same with growth. Like a 10x growth person becomes a 100x growth person if they're using absolutely every tool available for kind of creative testing, for reviews, for kind of ad library management. So yeah, it's it's a very unique and exciting time to be building. And we're taking one route and we'll find out whether it's the right one. But it doesn't come without its own set of risks.
Yeah. And how are you finding it on a personal level, compared to your previous experiences going down that venture-backed route where, maybe you had a bigger team and you had more money? What's your personal experience been like doing both?
I love it. I absolutely love it. I love the freedom that it gives us. I love the ability, just to really control kind of our destiny and our future on this, and not feel kind of tied to this unknown feeling future outcome, and feel like, every dollar in MRR that we add is actually something that will have a meaningful contribution to myself and my team. And the fact that we can give away meaningful amounts of equity to the people that we work with, versus giving that away to a passive sidelined investor, that's also something that's very important to us.
And is that part of the sell? Because, a lot of people who work in tech, and I know Johan, he's had amazing experience working with these hyper growth, huge organizations that have scaled to thousands of employees, raised hundreds of millions, if not billions of dollars. So I imagine trying to pitch, a much smaller team, a much scrappier way of life is difficult, or almost challenging to people who, like a lot of us, got quite used to the easy money world of 2020, 2021. How are you able to convince these people to come into the team and to be like, we're not going to give you, the big budgets, but it's a different experience?
You have to ask him, because I think truly he must have done his own kind of mental modeling of what this opportunity looks like for him. And he's worked for some of the biggest companies in existence, like billion-dollar IPOs. And I remember when he first joined, we were talking about the kind of daily ad spend budgets that he's used to having. And we were like 1% of that. And I couldn't even imagine spending that much money. And now we're not far off it, which is also crazy. So yeah, he must have seen the growth trajectory, and he's seen what these successful companies actually look like and what the metrics look like. And that there might have been something there that he could kind of scale into. But yeah, it's also, what we're doing is fun and it's new, and we're truly building something people want. Users are raving about us. We've got an amazing engineering team, and it's just, yeah, it's fun to be kind of on that upwards growth trajectory. Much more enjoyable than, stuck in a larger company that's kind of plateauing, or maybe an earlier stage that is pre-product market fit.
Yeah, absolutely. I know. I can definitely imagine that. I went through that similar experience of, almost seeing, the burn is such a worrying thing. It's great to have huge ad spend, but when you know that every month you are just bleeding cash, it's tough.
Yes.
Yeah.
I think that's also a big thing that kind of reflects across the team and the day-to-day is we're default alive, which is a very, very different place to be in. We're not thinking about our next raise to extend our runway. Our runway is infinite, and the additional cash we generate each month, we treat that as new bets we can make. And we're just constantly collecting chips, placing new bets. The whole team's aligned with that. And that's, a fun way to think about growth. Trying to place profitable asymmetric bets versus, your manager giving you ad budget and saying, do the best you can with it. So I think that's also part of the difference, and also makes it quite fun.
And are you using all of the cash that you make, the profit that you make, just to reinvest into the business, or are you getting to the stage where you can start kind of taking cash out?
So at the moment, we're reinvesting everything. It's all kind of, trying to hit some kind of revenue milestones, and then we kind of pull the lever back a little bit, and then give ourselves a bit more of a buffer, room to place much bigger bets, potentially acquisition level bets, and think about the different type of business we can be building.
Yeah, amazing, super exciting. I always want to talk about content more generally, right? You're such a content-led business, from the early days, scrappy doing it yourself, to hiring a growth person, to getting agencies to help. are you seeing, or are you leveraging AI in content generation? Are you seeing that as either a threat to good organic content, or are you seeing it as a tool to help you in your own content?
So we probably used every like AI tool, AI UGC, AI content creation system. We know them all. We know them all intimately. Like we've never really had anywhere near the same level of success through using like pure AI UGC or AI creative that we have based like compared to real humans, real people actually like doing it the hard way. For things like statics, I know like we've put out a lot of variants using AI tools. But yeah, like real human content performs best for organic by a mile. And for us, even like our paid content, the real human stuff performs better. I'm not sure we've had like a top 10 winning creative that has been like purely AI generated. And I think we've tried a lot.
Interesting. So for you, human always wins.
Yes, strangely.
Yeah. I mean, I stay away from it from my own content. It's good some of the AI tools to help clip or to help, that kind of stuff can be quite helpful. But the actual generation of, even I don't, because I just feel like it's so much worse. But look, Aiden, like, thank you so much for joining me. Like, we're out of time, but I think what you're building is super exciting. I love speaking to founders who are taking this route and not the flashy, raise loads of millions, hit super high valuations. So let's stay in touch. And if you ever do want to share news or like share milestones, let me know. Like I'd love to talk about it and post about it. But yeah, thank you for joining me.
Cool. No, it's been a real pleasure, and we should have a big milestone to share in the coming months, and we'll be shouting about it.
Amazing. Well, I'll look out for it.
Cool. Great to chat. Speak soon.
Thanks, Aiden. Bye-bye.
Bye.
Hello and welcome back to the Scaling Europe show. I'm here with Roman, one of the co-founders and chief business officer of Nebius. Nebius is such an interesting company. It kind of was born out of Yandex. Yandex was obviously the big Russian company. I think it was often called Google for Russia, or the Russian Google. The Ukraine war came into play, and as a result, Yandex had to sell off and offload all of its Russian assets, property, infrastructure, got delisted, and then came back as Nebius. Nebius is now a kind of like an AI infrastructure company building the groundworks, the infrastructure to enable the enterprise companies and AI companies to succeed at scale. So yeah, I'm here with Roman. How was that, Roman? Was that an accurate reflection of the journey so far?
Yeah, hi, thank you for having me here. I think it was quite accurate. I have one small correction actually, that we never were delisted.
Oh, okay.
Our trades on Nasdaq were frozen for 2.5 years, a little bit more, and then we just like overnight continued to trade with a new business, new name. Like some of the team inherited.
Yes.
But yeah, I think it's quite a unique situation on the public market.
I mean, it's so interesting. I mean, yeah, let's get into all of that. But first, I just want to touch on, like, you've just announced some big news. Can you touch on what you've announced, who it's for, and why it's important?
Sure. Yeah. So what we launched today is the product called Nebius Token Factory, which is essentially the next layer of the cloud, full stack cloud we built. And it's built to serve the inference needs of every vertical AI company and cloud native companies that apply AI, and in the future enterprises, classical enterprises. And we provide the full experience to use open weight models in optimized way, fine tune them, and actually build a flywheel of improvement, AI applications and AI products on scale. I think it's the very natural step for us. We always told that how we see the company is not just the large infrastructure company, not just scaling horizontally and building more and more gigawatts and deploying larger and larger clusters, but actually building the full stack offering for everyone who built on AI. And we started to do it with our multi-tenancy cloud, which I believe is one of the best products now out there. And now the next layer is actually for the next wave of customers that we see who, as I said, vertical AI companies and cloud natives and enterprises who actually start from a part of the previous kind of most of demand. They not start from building foundational technologies like foundational models, but they come actually to build the use case for the customers. And they need kind of new capabilities that we provide.
Yeah, absolutely. And people, you've already got some early adopters kind of using the Token Factory, right? Can you touch a bit more on who those people are? What are they using it for?
Yeah. So just a few examples. For example, we have a video gen company, Hicksfield, who are building a B2C product in video generation. And what we help them with is to build a very, very efficient, scalable infrastructure to serve inference and meet their quite aggressive needs in unit economics. So you can think about it like you cannot build it in a very naive mode, because when you come to B2C market, like the unit economics of acquisition becomes super important on scale. And you need to do all the optimizations that you can to, I don't know, like not over provision resources and serve like scale up only infrastructure that you really need. And you also want to do all the tweaks like, I don't know, tiering the customers and serve more premium customers with the better SLAs and the tail customers with the some other relaxed SLA, but for the cheaper price and so on and so forth. So we help them to build this infrastructure that actually enables them to do the business they do. Another example is one of the e-commerce companies in the Prosus, which is like large international holding. And this is different type of the customer coming from this like pre-AI era, like cloud native, digital company, but pre-AI era. We help them with few use cases. One interesting use case, they moved all their user notification processes to AI. And they had the task to reduce the cost comparing to the closed source models that they started with dramatically. And we could reduce the cost 26 times for them, which sounded like quite insane. But this is doable with the right combination of the smaller models and optimization that we did for them. Another example is like large e-commerce company that needs to process a lot of data we call it batch inference. So again, you are not optimizing for the latency, but you optimize for the throughput and the price. And here we leverage the fact that we are full stack, and we actually can use the fact that we control the underlying infrastructure, and we can schedule, we can orchestrate their workloads in a spare capacity that we have from other customers, and make sure that we actually provide them the cheapest price possible. Because for us, it's like, everything in our business, everything better than idle capacity. So if we can utilize it with this kind of high throughput, high latency, like type of workloads, it's good for us. And for them, it's also super win, because they reduce the price and have very flexible throughput. So this is just an example of the type of the customers, but we see everything from conversational AI, like, all the types of the chat and conversational applications. We see this kind of data processing workloads. We see e-commerces that do recommendations and search. So like variety of cases.
Yeah, and 26 times cheaper is a phenomenal result. Do you see, is that like a best case scenario? Do you see that going even further as time goes on?
Yeah, it's interesting because actually I think the market, let's say the non-professionals on the market underestimate how good you can optimize for the specific use case. So we see a lot of leaderboards that show like what model and what provider performs better, and it's important to show up there. But in the real use cases that we see, when the specific customer comes, they always come with their specific SLAs that they need, because everyone has their own limitations. And what is important, that everyone has their own stream of queries, type of customers and type of data they deal with. And then you have a variety of optimization techniques that you can apply for the specific workload. And actually the platform we built is the platform that simplifies for them to find the ideal setup that actually serves their specific workload on their scale, on their limitations in the best efficient way, to meet the economics, to have the flexibility to scale with the customers, and actually to, which we didn't mention, but the important thing is to control their destiny and control the data to make sure that their main asset, which is in our AI era is data, is handled right and applied to improve their use case in the best way.
Yeah, got it. That's super interesting. And I guess like so much of this has been built around enabling product inference using open source models. Are you seeing an increase in demand for open source models? And do you think that's a trend that's going to continue?
Yeah, absolutely. I think that we are in a very interesting time when I like to tell it that the AI demand is has few waves. The first wave of demand came from foundational model builders, not necessarily the largest ones, but like we have the largest one, the super labs, and we have like dozens or hundreds of the specialized model builders, and they were the beginners of the market. Then the second wave is actually these vertical AI companies, and there was the word not very pleasant, GPT wrappers at the beginning of this AI race. But now we see that those GPT wrappers are building like decacorns and the fastest growing in the history, new type of SaaS company. Like you can think about Cursor, Lovable, Cresta, you name it. So they start from the user, and they start from actually using the most powerful models to unlock the user scenarios to show the real value. And it really works because the models are very powerful. But then when they scale, they actually start seeing the limitations of sitting only on top of the frontier models, the limitations that we discussed actually. The price, the unit economics, the technological moat, the data they need to apply safely, like sovereignty requirements, a lot of things. And this is the moment when they start shifting to open weight models, and they need infrastructure to serve it, and they need the tools to like actually lower the barrier for them to achieve the same results. Because when they come to Google or OpenAI, they actually not only getting the best models, but they also got a lot of like tooling around that. And I think what we do is actually helping them to achieve the same results or better results with the ecosystem of open source models. And we definitely believe that this will be the pattern when a lot of use case, a lot of companies, when they unlock the use case, they will either switch or combine different models, because for some use cases, you want the most powerful reasoning model that thinks long time, kind of, or has a higher cost, but provides like the best result. But for some other cases, you can think about like low latency scenarios or low cost scenarios. You may be satisfied with another model, and you can take it from open source, you can fine tune it and control. So it's not necessarily the full shift. Like it's more like building more comprehensive system to in a less naive way to serve the real SLAs, and that's that we see it as a trend. We see a lot of demand coming, and we see that open source, like the ecosystem of open source models, continue to be quite developed. We see NVIDIA pushes a lot on having enough of open source choices in the world. We see even the big labs are open sourcing some of their models. So it feels like a good trend.
Yeah, absolutely. It definitely, I feel like more people are getting used to relying on those open source models. Like more everyday builders are finding ways to access those open source models and build on top of them and not just default to the big frontier labs. I want to talk also about the year that you've had. I mean, I think you've raised billions. The share price is up several 100%. You signed, I think, a deal with Microsoft that's just under $20 billion. This has been a phenomenal year for the team. Like, what's it been like working at the company during the course of 2025?
It was a lot of fun, a lot of non-sleeping nights, a lot of efforts, you can imagine. No, it's definitely one of maybe the fastest industry we ever saw in the world, in the history of the economics. Everything is moving so fast. The cycles are so fast. Like we just, it's crazy. We just 3 years from GPT-3 was released. This aha moment happened, and now we have like maybe the most impactful area in the world economics. Like all this news about GDP is driven by infrastructure deployments and so on. So like everything is moving so fast, and we are obviously super happy to be part of this race. And we see our role again as enabler, and we call us tech to tech companies. We really excited to work with all the great builders, foundational model builders, frontier labs, smaller labs, and obviously this new wave of vertical AI companies that doing such an amazing stuff that changes the businesses and changes the humans' experience every day. It's just it's just very, very fast run, and we see a lot of opportunities to create the value by our motto is this vertical integration. When you build all the layers from physical infrastructure through the robust cloud platform and then to value-added services to help people build, and that's a lot of fun and a lot of excitement from people use what you do and grow with you. It's great.
Yeah, no, and things are moving, like you say, so quickly. Things are changing so quickly. The whole industry is growing at an unprecedented rate. Given the speed at which things are changing and growing, are you able to plan effectively for 2026? I mean, the scale and the demand.
We obviously plan a lot. Obviously, our plans will be revised, and year is the century in this market. But I think like we have a very clear understanding, like the North Stars, the like goals that we going to, and I think that you could, in a simple words, it's two dimensions of scale of growth. Horizontal, like we just need to build more infrastructure. We have a very aggressive roadmap for new facilities for the next year, and the following years we invest a lot in A, physical infrastructure, and B, make sure that the platform is scalable and we can serve larger and larger customers. And then the second dimension is actually this building the new layers of the product offering and unlocking the new possibilities for our customers through software. And this is Token Factory, and we obviously have more plans for the next year, what new capabilities to the platform to bring.
Yeah, no, it's super interesting. I also wanted to touch on you listed on the Nasdaq, right? And being listed gives you access to kind of raise money in a different way to private companies to fund that expansion and to grow the infrastructure. But obviously, you had such an interesting journey where your shares weren't being traded, and then they were being traded again. Doing my research, I was like, what must that day have been like? What was that day like where you switched it back on, where your shares were being traded again? Did you have any idea about,
Yeah.
Well,
No, it was absolutely crazy,
Yeah.
and it's really happened like almost overnight. So we just got a call from Nasdaq. Okay, you can trade again, and we're like, okay, but nobody knows us. Like no coverage, no like. We have some legacy investors that invested back in Yandex and they just stuck in the stock and they like had no idea what we do. So it was just like full uncertainty. I think what helped us a lot is we've got some strategic investors that actually believed in us, and we just after the going public again or trades again, we had this pipe led by Axel Ventures and Nvidia that actually set the trust stamp on us. And I think then in the next like 6-9 months, it was like every month, like somebody new like learned about us, and we worked hard to get this awareness both in the product and in the market. And then Microsoft deal was obviously like the important milestone because finally everybody read about us in the news, even the people who didn't know. Like I had a funny stories like from people from my past 20 years ago, they just messaged me like, "Oh, I didn't know you do it." So it was quite a 5 minutes of the honor, and I think now we finally in the right place from awareness perspective, and Nebius is in the kind of our industry of AI clouds, AI infrastructure is a well-known name.
Yeah.
What we need to do, the next step is actually position us as much more than infrastructure. We know, like we built in a lot internally, but I would say market yet don't know how much we can bring more than just GPU hours. And this is the next kind of milestone that we are targeting.
Got it. Okay, so greater awareness of the other side of your business. Also, when you were going through that whole transition from kind of Yandex to Nebius and, shares being traded to shares not being traded, did you ever consider actually maybe we should just entirely delist and become a private company again? Or were you always thinking actually being public and having that option is going to be a huge advantage to us when we get things up and running again?
Yeah, it's a great question. Actually, I don't think we had a choice because we had a responsibility to our shareholders, and we definitely had to proceed this way. I think if you would have a choice, we would maybe prefer to be like private for some period of time. But in reality, that was a big luck for us to be on the public market that early, kind of like depending relatively to our level of much development of the company, because you're absolutely right. This is the market of combination of tech and capital, and being kind of in the public market opens a lot of opportunities to finance our growth. And I think this is quite unique thing about Nebius, that we started with some capital that we've got from like this painful but at the end successful kind of corporate restructuring after Yandex, but then being so early relative to company journey to open markets, we got access to the capital to finance growth, and it let us do things even not standard for this new AI cloud world, when we can actually deploy capacity in advance, finance it from our balance sheet, and do this more like hyperscaler game on smaller scale, obviously, but not just deploying clusters for large customers.
Yeah, it's such an interesting business that you're building, and it's going so well. I think you're still one of the most unknown tech companies of your size in Europe. And I think it's always, I think the phrase that you gave is like tech to tech. It's such an interesting one because you are powering so much of the growth and the tech that we're seeing across Europe, whether it's from the smaller to the enterprise AI companies. But look, Roman, we're out of time. But I feel like I could chat ages about this. But thank you so much for joining me. And
we should do it again. We have so many topics to cover, including European tech, by the way.
For sure. And I actually had a bunch of questions on that and your views on European tech stack versus US and infrastructure layer versus application layer. So look, if you've got time, let's definitely schedule a longer form interview at some point. I'd love that. But yeah, thank you so much.
Thank you for having me.
My pleasure.
That's great to talk. Thank you.
Hello, welcome back to the Scaling Europe show. I'm Seb Johnson. I'm here with Tobias from Antler. Tobias, can you give us a super quick intro into who you are and what you do?
My name is Tobias, and I'm a partner with Antler, based in our Stockholm office and one of the partners of our fund here in the Nordics.
Amazing. What is going on in Stockholm at the moment? It seems crazy from everybody who's not in that ecosystem. It feels like every week there's another funding round, another unicorn. Like, what's it like in the city at the moment?
I gotta say, for me, who I might not look that old, but I've been more than 10 years now in Stockholm tech, which feels surreal to say. It is an incredible moment here, right? So 10 years ago, I joined my first startups. Budbee was the very first one, later a unicorn, a tech logistics company. But by then, almost nobody wanted to go into startups. It was a very different scene. It was not as much venture funding. I think the international funds were barely present here, etc. Right? We had some early successes in Spotify and Klarna, but very, very early days. Right now, it's on fire. And what's happening? I mean, I would say three things probably. You have the fact that we are now on the third wave, according to me, right? So the first wave would be you had Skype, the very first like tech unicorn from the Nordics and maybe from all of Europe. Then you had the second generation where Spotify and Klarna, who then made this generation now actually grow up with tech around them from when they were born. I mean, many of the ones who are running companies now were just born when Skype was founded. And then secondly, there's a belief in success here. I think Lovable is definitely at the moment has been the one who's been most vocal and most, Anton is always talking about building $1 trillion company. But thanks to that success and obviously Legora, Tandem, others, we're actually believing in success. We think we can build great companies. And then thirdly, it is a great talent pool and it's always been. I mean, we've always had a lot of good engineering schools. KTH is one of the most well-known ones. But now that talent wants to go into startups. Like when you meet someone who's 23 or something in Stockholm now, they don't want to go to McKinsey or into investment banking. They want to build a startup. They want to be engineers. And that's just all of that melts into this great, wonderful pot that is Stockholm at the moment.
And why do you think that is? What's changed? Is it the visibility of great founders like Anton who are like banging the drum for entrepreneurship? Like, what is it that's convinced these early insane entrepreneur or like, soon to be entrepreneurs to not take the safe jobs, to not take the corporate route, but to take the harder route and to create something?
I think let's do a micro and a macro answer. The micro answer is definitely that, and the fact that like people with the backgrounds of Sebastian at Klarna or Daniel at Spotify and now Anton at Lovable make it feel accessible, right? None of them come from like a crazy background or they got a small $1 million loan from their parents. Like they've grinded their way there, and I think that's very, very, very important for everyone to feel like I just graduated from KTH or whatever uni here in Sweden. I can also do this. And at the macro level, some people have highlighted this. The upsides, I mean, there's upsides of like a very capitalistic society where everybody gets incentivized and where there's no protection. But the upsides of protection and having paid university, paid student loans, all of this, is that you can take so much risks, especially in your early years in Sweden. You can just be so risk on. And I think that's what we're seeing the benefits from right now.
Oh, so that's really interesting. It's like the culture, the socio-economic culture of, I guess, Sweden, Stockholm, and I guess it kind of applies more broadly to the Nordics, kind of creates a culture where you encourage people, you allow them to take risks. That's super interesting. I hadn't thought about it like that.
Exactly. And you need to combine that with it still being worth it, right? So you have the tale of two countries right now. I don't want to talk badly about any other situation, right? But in Norway, leading up to their last election, there's been so much talk about how they have taxation on unrealized capital gains and how big of a problem that is and how that leads to less innovation, etc. In Sweden, even though we have a socialistic setup socialist setup where you get supported, etc., you still get a lot of benefits. So we still have, I mean, amongst the highest concentration of dollar millionaires in the world, but it's the balance of those two, right? So you can be risk on and reap the benefits, and in between there you will pay a hefty amount of taxes, but you won't get unfairly taxed, at least.
Yeah, so you build a safety net to catch people if they fall and provide them kind of a launch pad, but also make sure that you encourage that innovation and that, don't punish people for creating something that is hugely, hugely valuable.
Yeah. I don't know if you wanted a political commentary, but we can.
No, I mean, we actually, and we, it's so rare that the political comes into it. I mean, normally, especially when we have these conversations across Europe, it's critical, right? Because most of Europe being either regulation, like very pro-regulation, or not being pro-innovation enough. It's often a criticism of politics. It's very rare that I get a take which is actually, the political situation in Sweden has enabled these entrepreneurs to take the risks, which I think is like an amazing point, and it's probably not something that a lot of other countries are doing as well.
Yeah, and my brother take everybody in is so obsessed. This is also a new thing in my view. This Europe versus US view comes up all the time, and people post about moving to SF and how different it is. My take on all of the talk about EU and all the things they're trying to do is just they should do less things. That would be optimal. We just want less involvement from the politics in that sense. They should make sure we have a good society, a well-functioning society, but entrepreneurs don't want to fill out forms to get grants. They don't want to do all of those things. Just to say it in this way, just let them cook and great things will happen, right?
Yeah, stay out of the way, I guess. And you've also got like a really interesting background, not just, actually quite recently you've become an investor, but for a long time you were building your own company. How are you finding that transition from building in Stockholm to investing in Stockholm? What's that change been like for you?
I gotta say, so with my last company, Memo, I think we were at some point probably fastest growing consumer startup out of Europe, marketplace for celebrity videos. It was incredibly fun, and I think seeing now and we had, of course, like a crazy pace. We went from 0 to $100 million valuations in 2 years. Seeing now the even crazier pace that companies have now, you do really get the itching in your fingers. You can really feel, oh my God, these guys are having so much fun because thanks to AI, obviously, you can build so much faster, be leaner and everything. And I would say I would probably be bored to death if I were sitting at like more of I call it a classic seed fund and doing 1 or 2 deals per year. And I would spend like all my days just reviewing decks. So, that wouldn't fit me, but now at Antler, I mean, I get to do a lot of the investments and I get to work very hands-on with those companies and those founders from day 0 to 1. And that makes it fucking amazing for me. Sorry for swearing, but that makes it very, very much fun.
And how is, Antler it's been famous for its day 0 approach, but given the growth of like AI tools and how quickly you're able to like build products, ship, create content to get distribution, how has the day 0 approach changed? And I know that you haven't been at Antler for that long, but what does day 0 look like now, given the prominence of AI tools?
Great question. I'm just coming up to my 1.5 year anniversary here, so I'm still very early and I can only compare to what I've heard about the past days, but I definitely do think if you compare for us or other early stage investors, 5 years ago, you could have a deck and you could raise on a deck and have an idea about something to build and sell. But that almost never happens anymore. Even for us, who's like the very, very early stage first ticket investor, I'm just build the easiest or like smallest version of this get the first customers. So that's really what has changed. And that's thanks to, obviously, you can build it in Lovable, or if you are an engineer, you can build it with Cursor or Claude or whatever, so much faster. And also, I just think that's the mentality right now with the discussion around like what's a moat now that software is getting commoditized. It is just having that pace, right? It's who can have the pace. And if you don't show that pace in the beginning, then I'm pretty unsure that you're going to be able to grow into pace later, right? So day zero now is all about build something, ship something, sell something, then we'll invest, basically.
Interesting. And then, Antler's always been quite hands-on. So when you do invest or when you're helping your companies, what is the support or the advice that you're giving to these companies?
Well, I mean, I've jokingly called myself the CEO of the CEOs sometimes, but that's not to make it sound like I know more than them or anything. It's just that a CEO always has to push everybody else, right? And then I'm the one who comes and try to push on the one thing that matters in an early stage startup, and that is traction, right? So they might be pushing their technical team or to ship something, etc. And then every week or even more frequently, I come and ask about how many customers have we closed? Like, are we actually growing? Are we seeing traction? And of course, just one part of it is just pushing them on it. That's, I think, a big part of the help. And then it's, of course, also helping them and doing introductions and making sure they build the right structures and processes and everything. But around growth and traction is definitely the most important piece.
Got it. And what kind of what's the kind of the makeup of the companies that you're seeing at the moment? And I think, are you investing just in Stockholm, or is it across Nordics, isn't it, more broadly?
Yeah, so Enter setup, we have I think it's 13 or so local funds, and one of those is a Nordic fund. So we have offices in Stockholm, Oslo, Helsinki, and Copenhagen. I personally mostly work with our Stockholm-based portfolio, but I see everything across.
Got it. And so, what's the makeup of the companies? Europe is doing disproportionately well on the application layer when you look at the data, and also just like, the biggest companies coming out of Europe, whether it's Lovable or Fixer, Legora, they're often at the application layer. Is that what you're seeing as well at the companies at kind of day zero? Are you seeing a greater proportion of application layer companies?
Yeah, for sure. I would say out of the deal flow that we're actively looking at, it's probably anywhere between 60 to 80%, 70 to 80% application layer AI companies. To be absolutely frank, that's the vast majority, and it's just because the opportunities there are so big, right? And then in the last 20-30%, it's not that part is like foundational model AI. You barely see anything of that, or close to nothing. The last 20-30% is more just like other stuff in AI, right? Whether it's hardware or similar. Of course, hardware can have AI as well, but you understand how I mean, not a pure application layer. So.
Yeah, and what is particularly exciting at the moment? Are you seeing, or are you looking for companies that are solving new problems in different ways? Like, what is it that really, when you see a company, you're like, okay, this is a great company, this is super exciting?
It's a great question. For me, I mean, it always comes down to the founders and making sure the founders have some level of magnetism or like charisma that just makes you like, oh my God. I think before I joined Enter, I spoke to one of our partners in Europe who was the best indicator for him is if he couldn't go to bed without thinking about the founder he met earlier that day. That sounds romantic. I don't mean it like that. That's the number one indication, right? Because that person will have that effect on other people, and that will compound to better sales, better hiring, better fundraising. So founders is number one. Secondly, on like the type of companies, I just think now is such a ripe time to reinvent so many software businesses, right? And there's this talk about, is software dead, etc. I still think software will be around and we'll use it, but there's so many legacy software players that will be replaced by a new generation now with leaner teams, different capital structure, different pricing structures, and that's really, really exciting at the moment.
And how is your experience, being a founder? How is that shaping the way that you are kind of approaching conversations with founders?
Well, you should ask the founders, but I do think I'm pretty straightforward with them. I have this kind of like nickname or whatever that I'm a startup therapist for many, because now we talk a lot about like the very first part, right? Meeting a founder and selecting and investing. But then there's the relationship that stretches for ideally like 10 plus years into the future. And what you know as a founder is that you will feel like shit and you will have huge challenges all the time. Like, because even when it's going great, then one of your best hires leave to start a startup, or that also happens when it's going poorly as well, right? Which makes it even worse. all of these things will continue to happen. And honestly, one of the few things, or one of the most important things for a founder is just staying sane and staying in the game and staying on top of your priorities and just being like coming back to, okay, what we are doing makes sense. Okay, I should do this task next, and not getting just destroyed by the fact that someone is leaving the company, you have a customer who's churning, and the fundraising is going worse than expected, all of these things. So just, I think I'm just more straightforward and just actually helping on, like, call it the psychology side of all of those things.
Yeah, almost being like, providing a support network for founders and entrepreneurs who are going through, I guess, some of the challenges that you've already been through.
Yeah, and I mean, between Memo, my last company, and Alter, that was what I did, like, more or less full time. I just said, I can help you. And of course, I help with how to structure fundraisers, how to do sales, how to scale a company, all of that. But a lot of it is this, like, mental support. And just like so many founders just needed a third party to be heard by, because they didn't feel like they got that from, they didn't have the right co-founder setup, they didn't get it there, or it was a problem in the co-founder setup and they didn't dare to go to the investors. And then they did somewhere where they can vent and get some feedback and input on this situation.
And how do you find that? I mean, I imagine, you make a lot of investments. There's a lot of founders. How do you find it kind of managing a big cohort or big group of entrepreneurs who all have their own struggles and difficulties?
I mean, I guess that's like having a big family and having a lot of children. You never hear someone who has like 6 or more children say that they stop caring about one of them, right?
Yeah.
It's the same for me. You care about them all, and I guess you just gotta be obsessed, right? I was thinking this Saturday when it was the 1st of November, right? And I'm always pushing my companies like, you should send your investor updates on the 1st, be on top of it, etc. And then it's a Saturday, it's the 1st of November. There's a million things I could be doing. I'm in my email inbox just like waiting for the updates and just sending texts immediately to those who send it, like, fuck yeah, that's great. That's how you should send an update. That's awesome.
No.
Just a very random example, right? I'm more or less like, yeah, just being very obsessive is probably the only answer to it.
Yeah, that makes total sense. When you live and breathe and you love this stuff, I guess you're able to just keep going and persevere.
Yeah.
I wanted to get
another angle to it, Seb, actually, which is I was at a lunch with a known unnamed, call it, growth investor, and he was going through his deals and how quickly they were sold and how quickly it went to DPI, and then he just kept referring back to what I do as like, well, you can do it the hard way, you can live like that, and you can have 10-year cycles until you get liquidity and stuff. And I was just sitting there like, yeah, everything you say makes rational sense, but I don't care. Like, I'm obsessed. I love this game. I love this space. I'll stay here. I'll keep doing this. You can show me like financial reasons to do something else. I'll never budge. I'll never change.
So this is it for you now. You think is this is the area that you found your kind of real passion point, as early stage founders really go from 0 to 1?
Yeah. I mean, every part of life is a hypothesis at the moment, right? And you have to be willing to change it and adapt. But at the moment, yeah, I feel very much at home in doing this. I love it.
Yeah, amazing. No, look, I mean, it must be great fun. I think Antler is it's a unique investment kind of like house almost, because you do have that flexibility to work with so many entrepreneurs at such an early stage and be very hands-on, right? That's not something that most VCs get the opportunity to do, which, yeah, it must be great fun.
Yeah, but the flip side is also, as I'm sure if you've spoken to other partners of Antler, is that you have to work a lot and you have to work fucking hard. So it fits best for ex-founders as well, who knows the grind and who can just be like, yeah, you have to be 24/7 on it if you're ever going to be supportive to this many companies.
And were you angel investing at all in your lead up to being at Antler? Did you have a big history of doing angel investments?
Not a very big one, but I did probably like 10 or 15 in the last 2 years of running Memo. So I had some expertise. I mean, the honest part is like I started in 2021, which was definitely the worst time ever. And I mean, it's ironic because everybody always like to show everybody how good of an angel investor you are, you name drop who you angel invested with. But to me, it's like, oh, I angel invested with Sequoia in a case in France. They're now gone, well, they got acquired. So, but return nothing to me as an angel investor.
Yeah.
I've done like some YC cases pre they went to YC. None of those have gone on anywhere. So it's like more than like me being able to feel like, oh my God, I had such a successful angel portfolio. It showed me that like, oh, all of the things that people say on the surface in venture, you should be very scared of. It doesn't matter that much who the co-investors are and all of that. What matters is this an enduring and stable company, especially in a hype time as 2021 was, and which arguably 2025 is now as well.
And are there any lessons learned from that period of investing that you kind of are applying now that we're back at the kind of peak of the market?
Just go back to your own fundamentals and do your own underwriting. Don't trust anybody else. And I think that's great with Antler being a first ticket investor. We don't just tag along on others' decision making. We most often make investments on our own or with a trusted co-partner, but we make our own decisions all the time. I think that's probably number one. Just like never outsource your decision making, which unfortunately a lot of investors end up doing, and you shouldn't.
Yeah, have your own thesis, I guess.
And if you want to do that, then you should invest in the funds instead. So
yeah, absolutely. Well, look, Tobias, we're out of time, but thank you so much for joining me. I'm actually about to speak to Charles from Strawberry. So
Charles.
Yeah. If you've got any questions, let me know. Like I know, but yeah, another big, Stockholm, super exciting company at the moment.
Ask him how much he misses me.
Okay, you know him well, do you? All right, that's good. Yeah. It's amazing, Tobias. Like, I'll definitely get you back on the show at some point. Like, yeah, I'm doing a big series on Stockholm at the moment. I want to do some longer form interviews. So thank you so much for joining me. And let's chat soon.
And happy to host you whenever you're in town, Seb.
Love it. Sounds good.
Ciao.
Thank you. Hello and welcome back to Scaling Europe Show. I am Seb Johnson. I'm here with Charles. Charles is the co-founder and CEO of Strawberry. Just raised a big round. One of the most exciting companies coming out of Stockholm at the moment. But can you give us a quick introduction, Charles? What have you built? Who you are?
Yeah, absolutely. So my name is Charles. I'm the CEO over Strawberry. I've been building AI agents and more specifically autonomous web agents since LLMs became first readily available with GPT 3.5. And it's always been a question of how can we help people do the most important work and automate the rest, right? And experimented with all kinds of interfaces throughout the years, started to build up my team of the most intelligent, cracked people I know, experimented with Chrome extensions, browser SDKs, all this stuff. And now finally, we have landed in our first real amazing product, I would say, which is Strawberry. And Strawberry is essentially a browser that the end user will download. It looks kind of like Arc if people have used that browser, but it has the agentic power of a tool like Manus AI, if you're familiar with that.
Yeah. And so why was that the form or the product that you ended up with?
Dude, that's a great question. We thought about this so much. And we were always like, do we need to build a browser? Do we need to build a browser? Like continuously, really since day one. But I can start listing up the reasons. First of all, you have all the context, right? So when the user is doing something, their agent can kind of sit next to them and learn their workflows. So like, oh, hey, I've seen you do this thing twice now. Can I do it for you? Right? Most services have connectors to, for instance, Gmail and a connector to Google Drive. So they can see the documents there, but Strawberry can actually see that you took a receipt from Gmail, dragged it into Drive, and that is like golden context, right? You can also migrate from your old browser, you get all of the context from that. It's an interface that we already spend 80% of our day in, right? Unless you're non-technical, so you're super familiar with the interface. And I say the final big reason is that the agents we can create, they can just be parallelized super effectively. You can have 10 tabs running that each have their own agent doing different work. in different web services. And of course, authentication is just solved automatically, right? So you don't need to have like a third-party storage with passwords and auth keys. It will just open a tab and it's going to be logged into, for instance, LinkedIn, if you want to do outreach, or if you want to find influencers, you can do that on TikTok. And it's like, no brainer. Anyone can do it. No need to code. No need to learn any complex new systems.
And how are you thinking about the use cases? So, I know that you've got specific agents for like sales, recruiting, ops, that kind of stuff. What was your decision process to deciding which agents you wanted to build and what use cases they were going to solve for your users?
Absolutely. So the idea with Strawberry is that you actually create your own agents. The reason we have these official companions, we call them, is to kind of make people start thinking what is possible, kind of in our messaging. But it's very, very easy to customize your own companions. And the idea with Strawberry is that, of course, anything that you do inside the browser on a daily basis that is repetitive, takes lots of time, it makes you, like all the tasks that make you feel like a robot, they should be done by a robot, right? And then you just teach these companions like, hey, go into this page, extract this information and put it into this CRM. Can you do that for me? And then it will do that right in front of you, right? So really the mindset is quite easy to explain to even non-technical people. Just tell it what to do. It's going to open a tab and do the same flow that you would do. And the reason why we're kind of focusing on sales is because these are low-hanging fruit. It's usually like prospect loads of leads, check them against some ICP document, and then add them to a CRM and even reach out to them on LinkedIn, right? So it's like a low-hanging fruit. It's easier for us to do. It's high value. We can reach out to a lot of companies. And we're just trying to find those high-value, low-effort use cases and kind of pump them out to the masses.
Got it. Yeah, get people using those for those specific tasks and sort of build out from there. I want to talk about the fundraise you raised. I think it was $6 million from some like really amazing investors. How did that round come about? Like, what gave those investors the conviction to back you with that much cash?
Well, so it was actually in like 2 installments, you could say. So initially, we were building more of a developer toolkit that would allow developers to build web agents. And then, the vision that immediately arose was we're starting to see this new internet where trillions of agents are communicating each second, sending more messages per minute than is done in an entire year today with humans, right? And it's transactions, it is decisions, it's all these things that will be happening. And how can humans kind of control this? So we built this tool for developers to start interfacing with the web with their agents. But then we realized at the beginning of this year, well, actually, it's better to just go to the end user instead of the intermediate with the devs. So we had already raised 2 million from our amazing partners at EQT Ventures.
Yeah.
And then when we had built the browser and essentially mimicked what we're doing with the SDK, but in a nicer interface, the browser for non-technical users, we released that on Product Hunt. It instantly became #1 product. And that kind of triggered the next frenzy where investors wanted to get in. We got a lot of different offers. And in the end, the partners we went with were the ones that seemingly had the best kind of understanding for the space and were the most excited about the product, had done good thesis around what we were doing, had checked out Manus and saw that we could actually do what Manus is doing, but in an even more intuitive way for teams, and ended up raising 4 from General Catalyst, along with, of course, the angels from Lovable, Hugging Face, and Supabase.
Amazing. And the launch was, or the announcement of the raise was massive. I think it was like you couldn't go on LinkedIn or X without seeing somebody talking about it. People like either investors or everyone was just flooding socials with it. What has been the reaction since? So, what did you see in terms of waitlist, signups, traction, all of that?
Dude, it's kind of crazy. Strawberry is still a beta, right?
Yeah.
But pretty much everyone agrees that Strawberry is the most powerful AI browser by a long shot.
Yeah.
So you can start a task with Strawberry, like find all of the tech events in Stockholm and all of the speakers that participated at all these events. And Strawberry would just like spend an hour finding literally every single one and their LinkedIn's. Once, you know, you will get like maybe 100 with the second best AI browser. Strawberry will get like 800. And so it's really Manus AI, like bleeding edge agentic capabilities wrapped inside this beautiful browser. That's what people are saying essentially. And of course, we have people now who want to essentially use Strawberry as a full-time employee. So they are paying like a minimum wage per month to just run Strawberry constantly. And it makes sense, right? If it can do CIA level research on anything that is on the web, even if it's behind like a authentication wall, Strawberry can do it.
That's amazing. Yeah, I mean, people have been so positive about it. I'm on the wait list, but I'm desperate to get it because so much of my work, some of it is so manual. You know, like I actually recently signed up to like a tool to help me with outbound messages on LinkedIn. You know, essentially, everyone who follows my page on LinkedIn, for a long time, I was messaging every single person individually to say, hey, thank you for signing up. Like, you know, if you like this, sign up to my newsletters, watch my podcast, whatever. And so examples like that would be amazing. And similarly, I track all of my content, like every bit of content. I know exactly how well it does,
Yep.
but it's all so manual.
Yep.
And I do it all on my computer in my browser, so I can really see the use cases. Where do you see this going? You know, like right now it's in beta, it's very early. You know, you're focusing on sort of like solving a few key areas, key use cases. How big can this get? Like, what does the future of agentic browsing look like in 5-10 years?
Yeah, I mean, it's so exciting, to be honest, because we're really still at the beginning. Like, we think we have progressed far, but if you just put aside the limitations with the models that are going to improve and it's going to get cheaper and faster, there's so much to do on the UI UX front, right? Like, the chat interface is, I would say, the equivalent to the terminal in the early computers. You know, when we invented computers, we had terminals because that was like how typewriters worked, right? And it was kind of a natural next step. Oh, let's make a digital typewriter. And it wasn't at all clear that we wanted Windows and a mouse and all of these applications. And it has to be the same with LLMs. So that's something we're working on a lot. Already we're starting to think about this with the companions, as you might have seen. We're trying to make the agents, we like avoid the word agent because it's so technical and like want to make them cute. You can easily understand them as a non-technical user. And, you know, as things grows, Strawberry will kind of be the interface towards the new internet, right? So the browsers today interfaced against HTTP, they load in websites so we can use them. But the future's internet will be agents communicating with each other, right? And it's going to be protocols like MCP, agent to agent, you know, generative UI, all of these things. And we'll have local models running on our devices. And all of these questions we're going to tackle. And if you download and you use Strawberry, you'll always be at the bleeding edge with like the nicest imaginable experience.
Amazing. You know, it sounds phenomenal. And you know, you mentioned that I guess like everybody's saying that Strawberry is the best browser-based, you know, AI-based browser out there. But that being said, you know, OpenAI released theirs a week ago, 2 weeks ago.
Yes.
What was that like for you and the team? You know, was it amazing to be able to go and try it and test it and feel validated that yours is superior? Was it this like, oh my God, OpenAI have released theirs? You know, what was your reaction? What was the team's response?
I mean, we had known it was coming for a long, long time. There have been rumors since like the beginning of this year that they've been poaching people from Chrome. And so it wasn't really a surprise. I guess the thing we're kind of thinking about in the beginning was like, okay, well, how good is it actually going to be? Is it going to be like a Dia browser where it looks good, but it has kind of limited AI functionality? Or it's going to be super powerful, like same level as Strawberry? It was like somewhere kind of in between. So I actually think it's been great for us so far because it's opened up people's eyes to what an amazing interface the browser is. And, you know, we don't need to spend loads of time educating people on why you should have an AI browser. And people were kind of disappointed with Atlas. So they kind of saw Strawberry then and were like, oh, let me try this instead. And we're kind of blown away, right? So, but I'm sure we're gonna keep innovating and being steps ahead of them over the coming few months. And yeah, we'll just see the best product. Let the best product win.
Yeah, absolutely. That's super interesting. So it's almost acted as through marketing, right? They just like help to grow your market and give you more customers, more visibility.
Yeah, and I guess I would also say that, like, our intention here is not to build or innovate on the browser necessarily. I mean, really, what you're getting with Strawberry is you're getting an intern. You're downloading an intern that can control a browser, and that's really what we're trying to get to, right? Give you this pleasant agent experience that is intuitive for everyone, even non-technical people, so you can start automating work at a large scale inside your team. And then over time, start introducing these more non-traditional browser features, right? And really rethink how the internet will look and function in the future.
Yeah, it's going through this massive period of transition already, but I think that we've barely scratched the surface in terms of what's to come. Looking forward, you've just raised, the money that you've raised. What do you need to do or achieve to get you to that next point where you can then raise the next round?
Absolutely. I would say there are several things people expect a browser to have. We still want Strawberry to be a daily driver, because that's when you can start to tap into all of that context. The user can leverage what they're doing during the day and share it with their companions and their team. So certain things are still missing. An obvious one is Chrome extensions, which we will be implementing next week. And, all of these shortcuts and small things people kind of expect and get really irritated at when they don't have them. We're going to fix all that. Obviously, costs and the time that it takes is a big thing people are concerned about with Strawberry right now. So working on getting that down. And then a few other like basic agentic features that, like scheduling tasks, for instance, is something that no one else has, but that we, of course, want to have. You should be able to tell your companions, hey, every morning, go to this news site and get like the recent events going on in the world and summarize them into a report. These types of things. A few other features we have in mind. And then once that is all done, we're ready to go completely open, general availability, open beta style.
Got it. Okay, so there's a couple of product features that you want to release that you want to get right. You want to make it a bit faster. You want to make it a bit cheaper. And then when you hit those things, you're going to do more mass market approach. Anybody and everybody can come on board. And at that point, it's just about scaling.
Absolutely. And at that point, we will have all of the case studies in place. So we're working with big companies now, saving them loads of hours in different teams, recruiting teams, sales teams. Once we have these videos in place and just have it super clear, Strawberry is actually a tool for teams that want to automate work. It's not just a browser. And we have like much better onboarding that explains everything. It's a rocket that's ready to launch at that point.
And how are you? I know it's early now, but how are you thinking about GTM? Are you thinking that this is going to be a tool primarily for B2B sales and get your sales team on it to automate their tasks, or are you thinking this has that big mass market adoption potential as well, where you could get anyone who's browsing at any point to be using Strawberry?
So I would say we're very similar to Notion and Slack, where we would have product-led growth in the beginning. It's like a consumer product, right? Anyone can kind of get it for free, try it out, fall in love with it, and then bring it to work. And eventually, when you kind of reach the limits of what is possible with product-led growth, you would start looking at our database. Oh, okay, we see 5 people from this company using it. Let me call their CEO, tell them to get the enterprise plan.
Yeah, absolutely. This is a super similar approach to Fixer AI. I had the CEO of Fixer AI on a few weeks ago, and it's similar in the sense that because it's such a great consumer-focused product.
Yes.
You get everyday consumers using it, and then because it's so great, they just take it to work.
Yep.
And then when they're at work, you kind of get those network effects where they tell their colleagues, and then you like you say, they pick up the phone and they speak to the head of sales, and then they do a big enterprise contract.
Absolutely.
Would-
So that's the plan.
yeah, and it's an amazing approach, right? Because so much of the value is so easy to understand as a usual consumer. I want to talk about guess some of your personal experiences. You've been operating for I guess a number of years now. What's your experience been like on a personal level? Like, what have been some of the hardest things that you've had to go through in kind of getting Strawberry to where it is today?
Yeah, that's a great question. Of course, one of the big things is just the amount of time you need to spend. And the time comes at a cost. You can meet friends and family less often. And I mean, when you reflect on that, it's really quite a big sacrifice that you're making. And you don't really realize how obsessed you are and how pulled into a project you are until you take a day off and you think how long ago it was you actually met some of your best friends, So I would say that, and then of course working that amount of time and locking your soul into what you're building. And then in the beginning, we're seeing less traction, and it was just really hard to get the product out. You do get those days where you're like in bed and you're like, I can't get up, man. I like you feel depressed, right? You're completely burnt out. You feel depressed. Nothing is going the way you want it. But then, you just get out of bed, you go to work. You might only get like 3 or 4 hours productive work, but that's still a win. And then you go back home, you keep doing that, and guess what? Eventually the universe throws you a bone, and you get back into it.
No, it's amazing. Yeah, you just got to keep pushing even in those low moments, right?
Yeah.
But look, Charles, we're out of time. But thank you so much for joining me, and thank you for the kind of open and candid conversation. It's amazing to hear about the journey so far, and I think it's going to be a huge success. I'm going to be watching along every step of the way, and if you've ever got news or milestones or things that you want to share, let me know. Because I love covering the type of company that you're building. An amazing, very exciting company that is transforming the way that people interact with technology.
Thanks, man. Yeah, I'll definitely hit you up.
Cool. Well, look, thanks very much, Charles, and let's stay in touch.
Bye.
And that is a wrap for amazing guests on today's episode of the Scaling Europe Show. Be sure to like, comment, subscribe, and tune in